Have your friends all of a sudden become crypto experts? Robbo from Stall showing you his phone saying, look at this, doggy coin is going up. Fucking doggy coin, peppy frog coin, even jizzlord token. You're not sure whether you can even take this shit seriously, let alone put your hard-earned money into it. Honestly, my experience with crypto outside of Bitcoin and some of the top 10 currencies, for the most part, it is still a gambling arena. That doesn't mean you can't make money out there, but know what you are getting into at least. Call a spade a spade. If you're going to dip your toes into the unknown ocean of the crypto world, here are 7 things you need to know before jumping in. Number 1, crypto has been pumping lately. But why? Well, our Yankee Doodle friends over in America have wrapped up their election, and by January we'll be ushering in none other than real estate tycoon, orange MAGA man, Donald Trump. Not only does he possess the dancing skills of a sideways camel having intercourse, but he's also the most crypto-friendly leader the US has ever seen. For better or worse, Trump says he would like to build a Bitcoin strategic reserve and has Charles Hoskinson, the founder of cryptocurrency Cardano, talking with US lawmakers to discuss crypto regulation. Elon Musk and popular former Republican candidate Vivek Ramaswamy have been touted to head the new Department of Government Efficiency, which just so happens to spell Doge. And the crypto market, like your bipolar, mood-swinging ex-girlfriend with Tourette's, when it reacts hard and has the blockchain world doing the Trump dance. But how long will it last? Really? Nobody knows. If we knew, we'd all be rich, selling the top of the market every time. A lot of it will depend on what he actually does when he officially becomes leader of the free world. And remember, crypto, ex-girlfriend, could go either way. Personally, assuming Trump makes it to his inauguration without being shot, I say we ride a bull market for a bit, but I've never trusted my ex. Could be a Trump and dump. So number 2, what does this Bitcoin shit actually do? Well, at the moment, to send money, you have to do it via a centralized system. In our case, a bank. If the person you are sending it to is not with the same bank, it may have to pass through many banks. There are other ways to send money, but they are all centralized single points of failure. There are many issues with the centralized financial infrastructure we have all become used to. We've had our personal data stolen, money transfers can take days and be costly, and in some cases, banks have frozen people's accounts. With Bitcoin, your personal data is not on the blockchain to be stolen. Transactions like sending Bitcoin to a merchant or a loved one can take minutes or even seconds. And assuming you take your Bitcoin off the centralized exchange and into your own wallet, your funds cannot be frozen. You are in control. You have the power to be your own bank. But as Uncle Ben said,
with great power comes great responsibility.
If you decide to self-custody your crypto, you are in control. This concept is huge, but you now have to put your big boy pants on. If you fall for a scam, type in a wrong address on a wrong network, it is extremely hard, damn near impossible to get those funds back. But there are simple measures you can put in place to avoid this. Again, big boy pants. With a bank, if you are scammed or send money to a wrong account, in some cases you can get that money back. On the blockchain, you and you alone are responsible for your transactions. You're on your own, buddy. So how does this infrastructure work? Remember, this is not a private institution. Literally no single person owns or runs the network. It's like a public financial system. To send some Bitcoin to my long lost father in Africa,
Boy, you're not the anything from Africa.
I could do so. The network is run by thousands of computers all over the world. Shit, Robbo next door is one of them.
I'm a Bitcoin miner and that.
These computers are like one large supercomputer. As you place your transaction, each computer is racing to solve a complex mathematical equation called cryptography, verifying your transaction many times over and entering them into a ledger. This is Bitcoin mining. All of these verifications have to match, otherwise the transaction fails and the funds don't move. Whichever miner solves the equation gets the reward, some amount of Bitcoin. When your transaction is verified, a new block is added to the chain forever. Anybody can see this, including you. It will be represented by a bunch of random numbers and letters. There you go. Still confusing, isn't it?
Yeah, clear as mud, mate. The hell is this boy talking about?
Bugger if I know. Bear with me. Imagine you're playing poker with 10 of your friends, each of you representing a computer running the Bitcoin network. Instead of using poker chips, you all put $1,000 each in a bag and you're each given a notepad and pen. Every time someone plays their hand, each person writes down what that player has done. Robbo raises 100.
I raise you a couple of pineapples.
We all write that down. Once the hand is finished, everybody compares notes to verify and make sure they are all the same. By the time the entire game is complete, everybody has a pad full of notes. of every hand and compares them all. Assuming everybody was paying attention and took correct notes, we can now determine who won and how much they get. These notes are then placed into a folder that can be referred to at any time, like a block being added to the chain. The points I've mentioned about Bitcoin hasn't even scratched the surface of what Bitcoin and crypto is all about, but it's a start. Now, number 3, could my investment go to zero? This will be a quick one because the answer is a big fat fucking yes. There are thousands of different crypto tokens. Shit, Cyril could make one and call it Get Your Ass.
Get your ass coin. Yeah, that's right. I promise this coin's going to have lots of utility, be very useful. So just get your ass up and buy it.
It doesn't even need to do anything. He just needs to find people keen or stupid enough to buy into it. That doesn't mean you can't make money off this style of trading, but it is gambling. Once you start looking outside the top 10 or top 100 currencies, you are definitely stepping into the zone of I'm going to lose all my shit territory. Just know which part of the arena you are playing in and invest. I use that term pretty loosely, but invest accordingly. I've played with some low cap tokens in this territory and made lots and lost lots, learning valuable lessons along the way. Now to self-custody, pretty self-explanatory. It's when you take your crypto assets off an exchange and into your own wallet. If you have a substantial amount of money sitting on an exchange, you might consider learning how to take self-custody of your crypto. After all, this was the whole point. Just in case you don't know what I'm talking about, I'll try to break it down. You see, typically we will open an account with a centralized exchange. A couple of popular ones here in Australia are CoinSpot and SwiftX, but there are many options. You'll deposit some of your money, and once you purchase your Bitcoin, ETH, ADA, or whatever, that exchange holds and controls your crypto like an IOU. This, to me, creates a single point of failure. Who knows what these guys are up to or what they are doing with your funds? In November of 2022, crypto exchange FTX collapsed, caused by a spike in withdrawals that exposed an $8 billion hole in FTX's accounts.
Holy goddamn, that's one big ass hole. That's pretty nasty, Cyril. I like it.
Stay with me, boys. Customers were unable to retrieve deposits and assets sitting on the exchange. A lot of dodgy practices were uncovered, and Sam Bankman-Fried, worth a whopping $16 billion at the time, was convicted for defrauding customers. But they weren't the only ones. Crypto broker and lenders Voyager Digital filed for bankruptcy, as well as Celsius and BlockFi. They all went down, taking people's assets and deposits with them. There are many examples of this. You can, however, move your crypto into your own personal crypto wallet, either a hot wallet or a cold wallet. You see, a hot wallet can be connected easily to the internet through your computer or phone for convenience to trade your crypto and interact with decentralized applications, or dApps. A cold wallet is a hardware device that will keep your data offline. They are much more secure for storing more substantial amounts of cryptocurrencies you may plan on holding for longer periods of time, rather than trade. In my opinion, a combination of the two are better than just leaving your crypto on a centralized exchange. There's plenty of info on the web and YouTube on how and which wallets to use for which crypto. Honestly, at first, it seems quite overwhelming, but once you actually do it, it's really quite easy. It's not as hard as it reads. You just really need to take your time with it. And here's another interesting question. Can I get scammed out of my tokens? And again, a resounding fuck yes. Of course you can. You can be scammed out of your bank account, your tax returns, marketplace, even your love life. The crypto world is no different. You have to remain vigilant at all times when moving your crypto around. One example, but there are many, is MetaMask, a great hot wallet that can hold many tokens from many chains. I get emails from them literally every day telling me I'll lose my funds if I do not update my wallet. If I click and follow the links, this will inevitably take me somewhere where they will ask me for my seed phrase, the keys to my wallet, at which point they will drain every single token asset I have. The thing is, I never gave these motherfuckers my email address. That was the whole point of being decentralized, not needing data like this. It is nothing more than a phishing attack, hoping someone will panic and fall for it. And they do. Educate yourself. Don't take action on things irrationally. Take your time. Okay, now to taxes. Do we have to pay tax on our crypto? Unfortunately, yes. We do not live in Dubai or Puerto Rico. We are here in Australia, and your crypto will be assessed like any other investment. If you make any profits, they will be assessed as taxable income, and you will pay your marginal tax rate on those gains. As with any investment, if you own the asset for 12 months or longer, you will receive a 50% discount and pay tax on half of that capital gain. You have to report your crypto-related tax events. Okay, now we're at number 7. I hear you. I'm starting to understand what Bitcoin does, sort of, but what exactly do all these other cryptos do? Well, the blockchain that Bitcoin exists on offers other benefits in the form of smart contracts. Smart contracts are a self-executing digital contract with the terms of agreement written into lines of code. Basically, like any other contract you have ever signed physically, they can also be created and executed digitally without a middleman or entity in between, cutting out a whole lot of bullshit. Projects like Ethereum, Solana, BNB, and Cardano provide the rails for decentralized apps known as dApps to build upon utilizing this technology. This has the potential to disrupt many industries, changing the way we deal with supply chain, finance, real estate, insurance, and many more. We're seeing it already. Some projects offer lending and borrowing capabilities where you can be both either the lender or the borrower. As the lender, stipulations may be built into the smart contract, outlining how much interest you will receive, when, and have safeguards like collateral to outstanding loan value ratios, ensuring that the lender does not lose any funds. As a borrower, you may put up $1,000 of Ethereum to borrow $1,000 of Ethereum. It's still early days and evolving, but the fact that we can do this already, basically bank amongst ourselves, is pretty amazing. Another example, in the music industry, an artist can release their music on the blockchain as an NFT, removing the need for a record label. You could also get creative and add more value to an album, like a one-on-one meeting with the artist, maybe a concert ticket, or a streaming appearance for any content creators. You could attach these to a certain number of NFT albums as you release them to gamify and hype up your album launch. They can also be resold on the secondary market. And then there's gaming, where blockchain is set to have a more immediate impact. And I'll show you why. Games like Magic the Gathering, Clash of Clans, Fortnite, you spend literally years and copious amounts of money building your armies and in-game assets, only to be worth diddly squat. These big gaming companies hold all the keys. You can't do anything with these assets at the end. Imagine being able to sell one of the original skins created on Fortnite, an in-game weapon owned by LeBron he might have made 1,000 kills with. He could have his name attached to it and it be sold on the secondary marketplace, creating more value because it was LeBron's. With blockchain and NFT capabilities, game assets are set to explode into another dimension, opening up a free trade marketplace never thought possible for gaming. That skin, that weapon, that in-game car your son keeps telling you so valuable is starting to actually become a reality. There is, however, much easier ways for your kids to build wealth and substantial wealth into their future. And if you'd like to teach them how, click this video right here.